Fitch warning of a possible ratings downgrade over U.S. debt. Joining me now is Matt Maley of Miller Tabak with us from Boston. So, Matt, let's get right to it. What do you make of this news from Fitch?
Well, obviously, when you have a series of things all coming together, it will be down the road in March, as your previous guest just talked about. And but one of the things that is getting more and more attention lately is our deficit, how much debt we have, and it all goes to confidence in the marketplace. We've been losing confidence on several different levels, not just politically but economically, in the last couple of months with the decline in the market. So it just adds to that. So I agree that it's on a near-term basis, it's not the biggest thing in the world because, look, at the market continues to rally on it. But when it comes to a head over time, it's not good. Confidence is an important factor in the marketplace. There's no question.
You're absolutely right. We had a pretty nice upside follow-through yesterday from Friday's big rally. What did you make of that with the shutdown going into its 19th day?
Well, it just really shows how people have kind of become numb to this whole shutdown thing. We've had it several times over the last couple of decades. It's, early on, people, oh my gosh, and it hurt the market. And then as each successive shutdown has taken place, we realize that the market, it doesn't have a major impact long term. It's usually made up at the other end in terms of any kind of economic loss. So people are ignoring that and focusing much more on the trade talks that are going on. And then, of course, that will shift to the earnings season once that gets going in a little over a week.
All right, we've been looking at the futures all morning, but a lot of people are talking about the Russell 2000 as well. What do you make of that, seeing a big bounce there?
Well, that's definitely a positive thing. We definitely need to see it continue. But the one thing we've seen first in the downturn, but we've seen over history, is that the Russell 2000 has been a great leading indicator for the rest of the market. It definitely started rolling over back in at the very beginning of September, before the rest of the market, which began to roll over in October. Now that it's starting to outperform, that's positive. Again, it's just a couple of weeks, but if it can continue, that would certainly be a signal that maybe the worst is behind us. Matt,
the market's making kind of a 28-3 comeback in recent days. FANG doing pretty good, too. What do you make of that?
Well, the one thing we have to, that's one thing actually that concerns me a little bit. The FANG stocks are bouncing more than the rest of the market, but of course they sold off a lot more than the rest of the market. The concern is, if you look at the XLK ETF, the technology ETF, or the semiconductor stocks, the SOX Semiconductor Index, they've both been slightly underperforming the S&P. It's only been a slight underperformance, but remember last year when the market bounced back after the correction we had at the beginning of the year, when it bounced back in February, it led the market higher. This time it's lagging. So I'm very concerned. Without leadership from the tech group, it's going to be a lot harder for the market to bounce back to the same degree it did this time last year.